2012, we were basically in the middle of the euro crisis. It was the year there was a small default of Greek debt. And so after the first, in 2010 was the first help they had, and in 2012 again. Van Rompuy, together with other presidents of the European Union, wrote a report, it's known as the Van Rompuy report, sort of setting a roadmap of how can be developed the European Monetary Union, pretty much taking into account the situation of the euro crisis, which had been the first and major crisis, and also a test about this whole project. And then that's what it was defined there, and then it was followed in 2015 by another report, this time of 5 presidents, and that's defines how should we further develop the whole structure of the economic monetary union. And the idea is basically that this will be formed by 3 unions, or it is formed by 3 unions. The regional monetary union with the ECB, that's already in place. What's so-called economic and fiscal union, that some aspects were already there. And the financial union. This financial union in itself has 2 unions, the banking union and the financial union and markets, the part more directly on the financial markets. And that's the whole structure. But one had to understand what this structure is for. And the idea precisely is to do with this, to help the euro area, and particularly the European Union as a whole, which now after Brexit, it's very close, both things, one to each other, to have more stability and growth. When people talk about the euro crisis, and they still see that now the countries are growing, but it's still unemployment is relatively high in many Southern European countries, particularly for young and so on, there is the impression that not much has been done. And that's actually not true. In very few years, a lot of steps had been done in the same roadmap. For example, in the economic and fiscal union has been the creation of the European Stability Mechanism. And the European Stability Mechanism has played already a major role in helping Greece, and helping other countries in crisis. So that's something was not there, and it is there. The banking union, there was nothing as such. And now we have the part of the supervision and resolution mechanisms, both mechanisms, already in place. Not absolutely fully developed, but those things are in place, and they actually had already resolved banking crisis. So we already had some good experience, not all so good experience, but some had worked in that direction. So all these things were not here in the EMU before. And then one wonders how these different unions or different parts have done. And certainly what stands out is the role of the ECB. The ECB now, it has not only done the price stability, actually the prices have been even lower than they should have been, but it has played a major role in the instability of the financial sector, to providing liquidity. The other is because there's a huge structure there, which is the so-called Growth and Stability Pact, which has a long story, which is a way to put constraints on deficits and debts of countries. And this has been here since Maastricht when we started, and with this idea that to avoid that they get too much debt, that eventually is a burden to monetary policy. But the problem is that even if the rules has improved, and one so-called improvement has been that if a country was persistently with too much imbalances, it's said in this language, it will receive a warning from these yearly reports of the Commission, then go to the Council, and eventually it might have even a fine, so penalty, up to 1.5% of GDP. That's substantial. in practice they never take place. And one can understand, because this at the end has to be decided by the council, so the council has to meet and then punish one of the guys who's there in the table. Well, these things don't work very well. The whole history of the European Union and now the Economic and Monetary Union has been of development. You know? So now we have steps to do. But if I had to say one particular step that is really important, it refers to the Economic and Fiscal Union. And in particular, to make out of the ESM, you can make the European Stability Fund, the ESF. And the difference with what we have now will be not just a crisis resolution mechanism, but also risk-sharing mechanism. I had referred to this again before, but I think that this is very important, because that will start moving things, and we don't have to wait that Europe is all at the same time converged and so on. No, we have to do it now, because if something we still have of the crisis is a lot of resentment. And we see it in populist movements, and there are strong reasons for the resentment, because inequality is high within the countries and across the Union. So I think it's important that we have institutions that people see that we can get something out of the European Union, and to have more stability and more risk-sharing, and not only for a severe crisis, I think will help in the labor markets, in the whole economy as a whole.